Realized vol obviously exploding on the back of the 20% rally in ETH yesterday. So whilst both of these assets were trading in the high 40s realized last week, this move, and that was after US CPI, it was going higher, but it wasn't going higher at a ridiculous pace. Since obviously the Ethereum move, we've seen realized jump to around 80 odd in Ethereum. Implied vols were trading at a slight premium to realize, so we did have positive carry. But, you know, obviously we have seen a big spike in both implied and realized on ETH. So whilst it is still showing positive carry, that's just because everything's just gone crazy to the upside on that 20% day. Obviously, Bitcoin has been a bit more muted. That realizes is higher, but it's not higher by like, 30 odd vols. The event risk is obviously well and truly back in crypto markets. I think ETH vol will stay elevated until we get a decision or more clarity on the situation. And now I do think it's strange that these things could get approved, like if they don't all get approved at the same time. The idea was, but they may wait for everyone to file so they can approve them all at the same time. But it does look like they have fast-tracked and speeded up the process, right? So, and they're talking about, ETF providers shouldn't stake their ETH and stuff like that. I think it is the thing that the most contentious point, basically. All right, so that's kind of what's been going on, and that literally happened yesterday evening. How did it impact the term structure? Well, you can see the Bitcoin curve has shifted up in a more parallel fashion by about 4, 5, 6, sort of 5 vols parallel. You can see this whole curve shifting higher. If you look at ETH, though, it's gone inverted. So there, that front end catching a much bigger bid, going up to like 90 to 100. And the back was actually well bid too, but real back March next year was up about 5 or 6. June was up 15, and the front end weekly stuff was up 40 vols, right? So that's the type of crazy moves we're seeing. Cool skew coming back with a vengeance in both. This data looks like it was a little bit stale. I think the front end of the ETH skew curve got to like near 20 vols. It did drift back a little bit after that, but a really dramatic move to the point where it's trading above Bitcoin front end skew now. And the back end is pretty similar. You can see 6 vols in the long end for calls. Similar sort of story in Ethereum. Looking at the RV chart, you can see, it shouldn't be a big surprise to see Ethereum trading very much over, and it's like 35 vols over, right? So the front end weekly 7-day going to a 35 vol spread. That's back up here. We can see on the chart. Now, if we were to zoom out for 2 years, you'd see 35 was probably last seen. This sort of ridiculous spread level was last seen in the merge, when the merge was going on ETH. But like 30-day spread is at 20 vols, and then the back end spread does come down pretty materially, but it is still actually about 8 or 9 vols still. So that's where we are. Once the event has passed, ETH's going to go to something more normal, but depending on how much the realized performs, you may see ETH trading at 10 to 15 vols over for a while now, as everyone once again remembers what ETH is capable of when it wants to move. Okay. In terms of the ETH Bitcoin spread, it's back to 0.052, which is key level. It's actually gone a bit higher than that today. But I was thinking it probably could go another 20% higher pretty easily if this thing does get approved. Those were highs that we reached in January. No reason why we can't retest those. We were wrong last week. We thought ETH Gamma was a bit of a sell. We did not expect this type of move to occur this week at all. But the game's changed, right? And when the game's changed, and when you sell vol, you need to be prepared for stuff. So even if you were selling vol, you got to make sure you don't oversell, that you just get liquidated and wiped out if these sort of things happen, right? Crypto is an animal, and when it wants to do stuff unexpectedly, it can do very violent stuff, right? So remember, size positions correctly, so you can survive the moves like this, so you can continue to trade even if you were wrong. Do not over leverage, or you will get wiped out. I was short a little bit of vol, mainly because I had done put spread collars and they were hedging my holdings. So I probably had about 50% participation in the ETH rally to what I would have had if I hadn't had any hedges. But, for me, that's fine. I can stomach that. Still making money. I'm just not getting blown up, and certainly not getting taken short ETH, which would be a bit of a disaster in this type of move, right? So just got to be clear about what you're doing, why you're doing it, know what your big picture view is, and then trade options around it tactically, but don't oversize them that they're going to completely take you out of your position, and you're going to be in all sorts of trouble. All right. That would be the takeaway. All right. So seeing this big shift back in skew, ETH catching up to Bitcoin, I pretty much told you most of this stuff. 20 vols in the front end, did come back to about 10 vol points earlier today, but that thing's going to remain volatile. Inverted curve on skew there. And that cool skew, like we said, is 6 vols like Bitcoin. What else? the front trades at about 3 vols in Bitcoin. So the front end call skew is nothing like what it is on Ethereum because no one's really expecting a big event on Bitcoin. But if you do think Bitcoin's going to imminently break this 72.3 resistance that's been in place, then actually just owning some of those Bitcoin calls outright is not a bad trade. And we have seen flows along those lines. Okay. Now, I do think if Ethereum keeps grinding up to 4,000 in anticipation of this thing getting priced in, if we get 90% priced in by the deadline on Thursday, it may well be that skew starts to come back down again, right? As we start to price in the move. So you don't need to knee jerk as much higher. But it's unclear what the impact's going to be on Ethereum, where the 4,000 is the right price on an ETF approval or 5,000 is the right price. Not really clear. I think we'll need to see what the ETF volumes look like. Some people are calling for 10 to 15% of Bitcoin volumes, but how that gets digested by the ETH market remains to be seen. And whether we do just continue to rip higher and get to 5,000 before we know it, right? I certainly wouldn't want to be short this market if it breaks 4,000. Okay. Dashboard is obviously going to be in sell calls on both these assets. But like I said, they are still showing both positive carry because those implieds in ETH have spiked pretty significantly. Flows, you can see here on the flow side, volumes are up about 40% on Bitcoin, up to just shy of 8 billion. Mainly bullish flows, as spot obviously went back to 70k. Short dated call buying between sort of 65 and 70k strikes. Call spreads getting bought in June, 70, 85 strikes. And December, 100,000, 120,000 call spreads also getting bought. There was a solitary risk reversal being bought in June. Not many flows on the bearish side like that. 60k, 80k risk reversals in June as a bit of a protection trade, it looks like. Ethereum volumes, they were flat to last week, previous to the spike, about 3.5 billion. But just in the last sort of day, we've had another 3 billion traded. So literally a week's worth of volume is pretty much traded in a day on this massive spike. Before the move, the general flows had been kind of here, selling these calls in the 3,000, 3,100 area. Gamma selling, as we said, Gamma was looking expensive. Since then, we've seen lots of short covering on screen. We've also seen big block trades. We've seen a big roll of 33 calls into 44 calls. That looks like a short call position that got rolled up in May. We had outright buying of 4,000 calls in May as well. And then we had a June call spread buyout, the 4,000, 5,000 call spread. So just lots of bullishness coming out in various different shapes and forms. Looking at the Gamma, we've had Bitcoin Gamma trade closer to neutral, having been short. But, you know, it's at this level close to neutral. It's not having a material impact on spot. Looking at the strikes, it looks like dealers are long 70k and short 75k. But I said I don't think it's big enough to have material impact given what's actually the underlying fundamental story that's out there. Ethereum dealer Gamma spike massively positive here at 30 million. But again, we've got strikes all the way between 33 and 4,000. But I didn't stop the thing moving 20% yesterday, right? So I don't think this Gamma is material enough to have massive impact on ETH. ETH is going to be moved by what the news flow is now on the ETFs. And if they do get approved, then what the flows are going to be basically, right? So that is what's going to be the determining factor. But we always keep an eye on this stuff because there will be times where there's not a lot going on. And these levels of Gamma, this positioning will actually help you have a better guess of how things are going to trade. I'd say we're not in one of those moments when you get massive sort of surprise news flow like this. You've kind of got to realize that this market is bigger than just the Gamma positioning. Okay. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.